Vice Chair Clarita is stepping down early following scrutiny over his trades during the pandemic. Fed Vice Chair Richard Clarita said he will be leaving his post Friday, shortly before his term would have expired. He's not the first Fed gov to be taken down by some trades. He won't be the last. What are your thoughts on this as we head into 2022?
I think every Fed governor should be able to trade whatever the hell they want.
That seems bonkers to me.
I don't know why it seems bonkers to you. It seems bonkers to me that anybody cares what a Fed governor does. These guys are, I told you.
Did you just snort?
No, I told this.
He did.
I've told this story before a million times. If Ben Bernanke says he doesn't manage his own money because he has no idea what's going to happen, what does this Fed governor know about anything? You think a Fed governor buys or sells, 100 shares of Amazon or Baba or Apple? They have some.
Buys a 20 lot of calls.
I don't like the way that it looks, man.
I would love these guys to trade bonds. I'll bet you this guy's never traded a bond in his life. Okay. The concept of like, oh my God, a CNBC host can't trade, a Fed governor can't trade. Only thing I'm not okay with is the CEO of a company trading their own stock.
Sure.
That's it. Other than that, if a Fed governor wants to trade the S&Ps, go trade the S&Ps.
Go light them up.
If the president of the United States wants to trade the S&Ps, go trade them.
That seems wrong to me. No.
No, it's the most asinine thing to say these guys have a clue. I guarantee if they could trade, you'd fade every move they make, you make money.
And lots of it.
I'm going to save this for my chat with Victor, but
I'm going to save this for someone who has a penis. Okay, fine then. That's fine. You don't want to debate the queen.
How many members of Congress and the Senate are there total?
565, I believe.
And of the 565, how many do you think outperform the S&Ps?
All of them.
If the number comes in around 8%, would that surprise you?
I get.
In a normal distribution curve, okay? If you had 550 politicians, all right, and you said how many of these politicians are going to blow the doors off of the S&P return, okay, the amount that we would say in a normal distribution curve would be about 16%.
Sure.
So 16% of, let's just say 550 is what, about 80, right?
Sure.
Okay. So if it's supposed to be about 80 mathematically, like 75 or 80 should have done crap. 75 or 80 should have blown the doors off. And then the rest, the other 400 should have fallen in the middle somewhere. All right.
Yeah. Standard normal distribution. I got you.
So if I told you that only 32 beat the S&Ps, wouldn't that kill this whole argument?
Yes.
Okay. Well, that's how many beat the S&Ps last year.
That's it. That's your mic drop.
That's why this stuff's so stupid. That is my mic drop.
Yeah, but my question is not so much about beating the S&Ps, but what are politicians doing? Like, who are they in service to? Even though the returns may be crap, politicians should be doing things in service to the people. I'm saying on its face, this looks like you don't know what they have in the back of their mind when they have positions on and they're initiating contracts or deals or stuff for whatever sector, for whatever industry. That's all I'm saying. I'm saying it's not about, well, how many people actually made actual money on this? It's how do you know people weren't conflicted in their best interest?
I am much more concerned about the future of our democracy than I am about some politician trading 100 shares of Apple. Yeah. My opinion, Victor, is very simple. I think everybody but company insiders that have non-public information at their fingertips, like the CEO or CFO of different companies, should not be able to trade their own companies. But other than that, if you're a Fed governor, if you're the chairman of the Fed, if you have any position in Washington, I feel the advantages of you trading far outweigh the advantages of you not trading. My example is 16% of 550, let's just call it about 80 people, politicians should be above, outperforming the S&P. And what actually happened is only like 32 outperformed the SPY. And 16 of them were Democrats, 16 of them were Republicans. There's absolutely completely random. In fact, if you look at a breakdown, and it started with Nancy Pelosi, but Nancy Pelosi was the Democrat that had the highest return versus the SPY, but 6 Republicans did better than her. So she's irrelevant. The whole thing is irrelevant. I'm saying that in a normal distribution curve, there should have been 80 people that do better than the averages of the SPY, but instead there was only 32. The bottom line here is that I believe this is much ado about nothing. And I think the advantages of politicians and Fed governors and anybody else that's a policymaker / decision maker, it is so important that they understand financial markets. This goes for television hosts and radio hosts and podcasters and everybody else. Do whatever the hell you want to do. You don't know what's going to happen next. Go do whatever you want to do. You can't be involved in like non-public information or pump and dump schemes, that kind of stuff. But anything else, do whatever the hell you want to do.
Okay.
perhaps the fact that these politicians are sort of drinking the Kool-Aid with us, they're more likely to swat down stuff like transaction taxes or things like that that the normal retail trader does not want to have to deal with. Let me concede that politicians participating, I can agree in theory that it does benefit the retail trader if they have the same outlook, the same desires, their selfish desires also make them act in a way that's going to benefit the retail trader. Let me concede that. But let me also say that it is this non-public modifier that you keep throwing in there. That's sort of the crux of the problem. So the problem here is, Tom, like, how do you get to non-public?
Because you're talking about a simpleton Fed governor as opposed to the enormity and the totality of the entire global stock market. It's idiotic, in my opinion. I don't care who you are. Like, there's nothing the Fed chairman can do where anybody knows what the reaction of the marketplace is going to be instantly, and they don't even participate in that. You know, you can't move the equity markets. The Fed is reactive. They're not proactive. Everything they do is late to the party.
In almost all scenarios, I agree with you. Almost all. But Tom, in a scenario where I'm about to make sure the market has trillions of dollars of liquidity, in a scenario where I'm about to, for the very first time, explicitly backstop credit markets, these things have never happened in markets to the size and scale that they have happened. And the Fed knows that they have to do something in order to support this economy. Otherwise, we will see a depression of size and scale that we have not seen in nearly 100 years. And if you're looking at that type of response, which we got, a tail type of response. This is not inside of the distribution curve saying, hey, maybe we should move the Fed funds rate 25 basis points. This is not that type of decision. This is a massive, massive change in the structure, complexity, liquidity, and monetary position of the overall landscape of equities and credit. Normally, I would say, sure, 25 basis points, maybe knows it 6 hours early or 12 days early. Who cares? This is different. So you have to take precautions to prevent it.
Because the advantages of them participating in the marketplace far outweigh the negatives. That's the whole reason why you justify it. So like if every member of Congress and every member of the Senate, which is not the case right now, held a crypto position, you have to sometimes prime the pump a little bit. You have to get them going. You want somebody that's never had a hamburger before to love hamburgers, just give them a hamburger. And that's essentially what we've got to do. We are in a situation where, again, I mean, I think it's obvious. If every politician in this country or every politician in the world had a position on in a decentralized digital asset, we'd be way further along in DeFi and we'd be way further along the economic curve. I just think, you know, we're being very short-sighted when we look at things like some Fed governor, you know, he's a nervous Nelly, sold his stuff on Thursday, bought it back on Monday. You know how many times I've sold stuff on Thursday and bought it back on Monday?
So here's the problem, Tom. If I ask you what happened yesterday, you'd be like, I made some bad decisions. I got spooked and whatever. You don't go normal portfolio rebalancing. You probably would not.
They don't know how to articulate it, Vic. They're not traders for me.
Fair enough.
To say I'm a trader, so I can articulate selling something in the hole and buying it back higher. I got double whammied. You ever going to hear a Fed governor go, yeah, I got double whammied yesterday? You're going to think that that's some porno term. I don't know. I'm just worried that we're overthinking these things and we want everybody to participate in the financial markets. It's good for business. It's good for everything that we do. And let's not discount the advantages of that over, you know, oh my God, only 30 people outperformed the S&Ps last year. You know,
here's the thing. That's the holy grail argument. I can think of nothing that beats this argument because, you know, I believe in that mission too. I believe that more people should be participating in markets. How do you explain it then to the person who's not participating in markets? How do you explain it to the person who is not a retail trader, who is paying higher prices for meat and fish, who got priced out of their home? This guy's feeling like, what do you mean to tell me Nancy Pelosi made $30 million in their minds trading on non-public information? How come 3 people in the Fed have stepped down in the last couple of months and they make millions of dollars? And how come I got to pay, you know, hundreds of dollars for a ham sandwich? What do you tell that person? How do you rationalize it to that person?
The optics don't look good, but those people, they're being fed that by people that also don't understand the story. Anyway, we're out of time because we got to make the opening.
We're out of time, and there has to be a winner claimed, and I am going to claim Victor Jones as our winner of today's debate. We're going to take a quick 90-second break and come back. Victor won, Sosnoff nothing. And listen to Taste Trade Live.
See you tomorrow, Mr. Jones.
See you, man. See you guys.
Yeah.